Well, hello everyone. Hello Reddit. Hello Superstock. Hello world. Thank you so much for waiting. It is me, Lourdes, or as I like to go with L. I'm here today with the amazing, phenomenal, fantastic, one and only award-winning investigative journalist, Lucy Commissar. Lucy, thank you so much for joining us today. I am so excited about this AMA. The more that we've discussed, the more phone calls we've had, the more I've learned about your background and your history and your involvement in this whole saga with not just GME, but with naked short selling. My mind has been absolutely blown away. So, needless to say, everyone is thrilled to have an opportunity to hear directly from you. So before we begin, I would love it if you could maybe give us a brief introduction just about, yourself, your background, and how you really got involved in GameStop. You are muted, Lucy. Excellent.
Okay. I got involved in journalism years ago. I was still in college in the civil rights movement. I went to Mississippi and became editor of the Mississippi Free Press, which was a newspaper focused on the civil rights movement. And later I ended up coming back to New York. I couldn't get a job in journalism because they weren't hiring women. I once tried to get a job at UPI, and the person in charge of the bureau in New York said, "I'm sorry, Lucy, we already have 3 girls." So I became freelance and began writing about social justice issues, labor, civil rights, women, and moved on to being interested in writing about what was going on in developing countries when there were groups trying to democratize, to overthrow the dictator. And in the 80s and 90s, I went to the Philippines, which was ruled by Marcos. I went to Zaire, which was ruled by Mobutu, and I went to Haiti, which was ruled first by the Duvalier and then the people that followed them, but of the same clique. And in each of those places, these were on 3 continents, people said the dictator has looted the country and the money is all in Swiss banks. I thought, what is that all about? I haven't been reading about Swiss banks being the places where dictators, kleptocrats put their money. So I began to look into it. And that started me about in the late 90s in writing about offshore, the whole offshore bank and corporate secrecy system. And offshore, by the way, doesn't necessarily mean it's an island, although there are many in the Caribbean and on islands off the UK. It could mean Switzerland, Liechtenstein, Luxembourg, and right now it also means, in many instances, the US and the UK itself. And
so that's interesting, Lucy, because when people think offshore, they will think Cayman Islands or some island somewhere. But what you're telling me, and as I understand it, is that offshore means a secrecy haven. So you can still have an offshore account in the United States.
Yes, you can. Places like Delaware, Wyoming, they advertise, set up a company. You can't have a bank account that's secret, but you can have a company that is secret. Now,
so Lucy, how did that, so your initial involvement in sort of these financial crimes and secret bank accounts and the offshore system, how does that tie into your involvement with GameStop?
Well, because of writing about offshore, I got invited to be in a film which would be called The Wall Street Conspiracy, which came out in 2012. And when the person called me and I talked to the person who invited me, I said, I never heard of naked short selling. And he said, don't worry, we want to talk to you about offshore and how that is linked. And it certainly is linked. But when I went to the studio where people were being interviewed for the film, I met everybody who was involved in fighting naked short selling.
Okay, Lucy, so now you have to spill the tea. When you say you met everybody, who do you mean?
I met Wes Christian. I met Suzanne Trimbath. And
you met Dr. T?
Yes.
Wow.
So therefore, and other people that were in that film. And the film, by the way, is now on YouTube.
Did you also meet Carl?
I don't remember. I think he was there, but I don't remember meeting him.
Mm-hmm. So I'm glad you mentioned that the film is on YouTube, because it has the link to that film and that documentary has been posted consistently on the Supersonic website by various users as well as mods. So for anyone who's watching and who has not seen The Wall Street Conspiracy, it is available to watch for free on YouTube, and I suggest everyone go and watch that. It is mind-opening, and it is absolutely phenomenal. So before we kind of dive into the whole GME saga and some of the questions that users, apes have been providing. Now, Lucy, the reason we call ourselves apes is it's kind of building a sense of community. And it's interesting. I actually read a post today on Superstock this morning while I was drinking my coffee and reading my daily DD, and DD stands for due diligence, by the way. I saw a post by an ape, and I can't remember who it was. My apologies, but they essentially said something along the lines of how they appreciated that we all call ourselves apes, because it's a reference to the fact that you have this community of people from around the world who are learning about this very complex economic and financial system. And by referring to ourselves as apes, we're, essentially implying that, we don't know anything, but we're here to learn. And it's almost inclusive in a way.
To start with, to show you how the offshore system really does connect with naked short selling. And it's about the Sedona story. And that started out about 20 years ago. Sedona is a software company based in Pennsylvania, in King of Prussia, Pennsylvania. It was just starting out, and it wanted to expand. So an investment banker named Michael Vasinkovich, he was working at a company called Ladenburg Thalmann, and he said he could help finance their growth. Now, this Ladenburg Thalmann was owned by corporate raiders Carl Icahn and Bennett LeBeau. Those names certainly. The deal was Vasinkovich was going to get Sedona a $2.5 million deal in which he would locate investors and sell shares to them. The lenders would be paid back when the loans came due. They would be converted to shares. So the deal was, you have a loan, and what we promise to pay are the shares. And the amount of shares depended on the stock price at the time of the conversion. This would come to be called death spiral financing, and you will see why. That's where offshore and naked short selling came in. Thomas Bodian and his brother Andreas, they are from Vienna. They had a company called Rhino Advisors, and they would be the intermediaries working with Sedona and the man from Ladenburg Thalmann. And they were working with an offshore fund called Amro International, which was registered in Panama, based in Zurich, 2 offshore places. Now, the Ladenburg investors included the Batliner Group. Well, anybody did some due diligence, they might find Herbert Batliner, according to a 1999 German intelligence report, was in the business of laundering illicit funds. And U.S. Prosecutors told a Colorado trial in the federal court that Batliner had been handling the money for a very prominent Latin American drug dealer. So the contract with Amro said no shorting, because the shorting would push down the price of the shares, and the less the shares were worth, when it came time to convert them, the loans to shares, the more of the stock that Amro would get. But the Bodians went to work. When Sedona signed the deal with Ladenburg Thalmann in February 2000, the shares were trading at $6. Every time the company made a good deal, good news, such as a relationship with IBM. It should have tripled their shares. The shares went down, and they couldn't figure out what was going on. But it turned out that the Bodians were shorting the sale through an electronic communications network that allowed the seller to hide. And a month before the conversions, Andreas Bodian told the brokers at the infamously corrupt and now defunct New York brokerage called Refco to start selling Sedona stock short from an account at an offshore Refco affiliate. Refco was not fly by night. It had $4 billion in some 200,000 customer accounts. It was the largest broker on the Chicago Mercantile Exchange. In a month, they pushed down the price of the share from $6 to $1. Now, Bodian told the brokers, and this was on tape at Westminster brokerage in New York, keep selling, use unbridled levels of aggression, because every dollar that you sell is a dollar in my pocket. The price fell to 75 cents, then it fell to 10 cents. And the Bodians, the trading that they had been doing in 1 month represented 40% of all trades. Somebody should have been looking at that, trying to figure out what's going on. And the conversion left Sedona still out of their $2.5 million loan, owing $1.9 million. And they would have to issue more shares because they would end up letting the Bodians would control the company. So they started out in February of 2000 with 77 employees. They had 65 clients that wanted their software. They had an IBM contract. They had 17 million in financing. When the stock tanked, they lost business. Companies don't want to buy software when they may not be anybody around to service it. They couldn't get other financing. They had to fire employees. So Sedona finally went to the SEC and the Justice Department. And the justice, looking at what was going on, they charged Andreas in a criminal case, but he jumped bail and went to Vienna. Now, Austria doesn't have a treaty with the U.S. that where somebody's a miscreant in a financial crime, you can't demand that person come back. There's no extradition. So, and Thomas Bodian and Rhino settled with the SEC for $1 million without admitting any guilt. But the SEC did not sue Ladenburg or Batliner or Westminster or anybody else involved. So in May of 2003, that's when lawyer Wes Christian got involved. He filed a civil suit against Ladenburg Thalmann, against Vasinkovich, Bodian, Rhino, and some others. However, Judge Swain in New York heard the suit, and over 9 years, she blocked the suit by not ruling on the very first key motion. She also never allowed Sedona to get discovery, which would have given them the documentation they needed. She dismissed most of the defendants, including the central figures. And finally, Wes Christian settled with Ladenburg, which was a few months before the case was scheduled to be heard in federal court. So Sedona is still in business. It's trading at less than a penny a share. What are the lessons that we have here? Major companies, such as Ladenburg, may enable fraudsters. That the SEC and the courts do not provide protection to the victims. Sedona was taken down in 2001. When the SEC passed Reg Show, which was to deal with with short selling in 2004, they included massive loopholes, which have facilitated naked short selling at GameStop. And for example, it ignored fails that didn't happen in public exchanges. The Bodians had moved trades through Canada.
Sorry, are you referring to fails to deliver?
Fails to deliver.
Mm-hmm.
But it's only, they've actually put out a paper saying this only refers to trades on exchanges. This doesn't include when you go, nobody knows what's happening in Canada or some other places that are not providing information, or in dark pools. So they did not take the lesson. They knew about the case. They were involved in the case, and they just let it slide. Now, Wes Christian told me that more than 1,200 hedge funds and offshore accounts were working through more than 150 broker dealers and market makers to strip these small and medium companies of their value with these death spiral deals. And the lawsuits show that the illegal shorters use shell companies in offshore Guernsey, the Caymans, Costa Rica, the Bahamas, and many of the companies that the Bodians cheated were put out of business. That's the first important lesson. And in the end, we will, as we go down through the years, the decades, it ends with GameStop.
Wow. Thank you so much for that, Lucy. And I'm glad that you gave that sort of explanation of where it first started, because that actually ties into one of the questions that we have from one of our users. So if we could just pull up that question. So if we scroll down just a little bit to get to question number 2. So user Seek Adventure has asked, will the SEC not only investigate but also take action when it comes to short selling stocks to $0, like they wanted to do with GameStop, counterfeit shares, dark pools, etc.? And if I understand correctly from your story, what you're saying is that if these people end up leaving the country and going to some place like Austria, for example, then too bad, so sad kind of situation. Is that correct?
That's correct. Sometimes they go after the low-hanging fruit. For instance, they went after the Bodians. They got a settlement for $1 million. They did file a legal complaint against Andreas. But what about the guys at the top? What about Ladenburg Thalmann, a very important company, which was then owned by a very important guy named Carl Icahn? They don't go after the big players.
Okay, and so then, speaking of low-hanging fruit, then so if you could just pull that question up again, because there are a few other questions in that screen that I'd like to ask. So if the SEC isn't doing anything when it comes to market manipulation, what are there, if any, ways that companies as well as shareholders can do to fight back against market manipulation? Do you have any thoughts on that, Lucy?
Well, what's happened in the cases, and Wes Christian knows a lot about this, what was discovered, first bringing the cases in federal court, is that even if they got to a certain level, then they might be knocked out, because in certain cases the judges ruled that only the SEC has jurisdiction in that kind of complaint. So the federal courts were not useful. But so then Wes started going to the state courts. And once you can get discovery, which is you find out where the bodies are buried and where the evidence of the dirty stuff, which you can do when you're in a court case. You can demand that the other side give you particular documents that you are asking for. And that is how you get the evidence. You go to court, now you have to go to a state court, and you demand the documents. And I'll talk a little bit later about how that worked out for another major company, but I think that's the way to go.
Thank you. And if we could just pull up that question again, because I think this is a perfect time to seg into our next topic, Lucy. And this is a hot topic with a lot of users on the forum. So back on March 10 of 2021, GameStop was able to reach a price of $344 until suddenly journalists wrote negative articles which stated that the price of GameStop dropped. But the price of GameStop didn't drop until 15 minutes after the negative article stated that it dropped. This was huge, Lucy, because we had several screenshots from several users around the world who were posting this on social media, on the GME website and other places. Do you have any thoughts or comments on how something like this could even be possible?
That's a good way to get into another story, which specifically deals with journalists. This is a story about a man named Elgindy, Anthony Elgindy. He was an Egyptian who pretended to be an Italian. He lived in San Diego, and he ran a subscription stock message board on the internet. he had a few hundred hedge funds that were members. They were paying him $300 to $600 a month for the privilege of being on the website talking about who are we going to hit next. Hit next means who are we going to target with naked short selling. So such and such at the street will publish a story on Thursday saying this, that you can get a locate in a brokerage in Vancouver or at Goldman Sachs. Among the members was Dan Loeb, who founded and heads Third Point, one of the world's largest hedge funds. And he used the screen name Mr. Pink, which is a reference to a character in Reservoir Dogs about a bunch of gangsters using the name. One of them was called Mr. Pink, and he has talked about that online, not about what I'm going to tell you, but he says he was a Mr. Pink. So Elgindy had confederates inside the SEC. He would short a company, go to the SEC, get an investigation opened, the stock would fall. A former Lehman broker who had retired to Florida got a call from a fellow he hadn't heard from in 20 years. It was a former penny stock manipulator named Jonathan Kirshen, who ran Red Star Management out of Costa Rica. And he told this former broker that the stock of an internet health company he was an officer in was going to be hit by an attack. The person said, "Why are you calling me?" He said, "Well, years ago, you treated me fairly." So if there was going to be attack, he probably was looking at the website of the company, and he found out that this guy was one of the officers. He also told him about the Elgindy website. And he said the attack would include articles by financial writers. So Kirshen, on tape to the broker, said, "We have journalists on the take." Kirshen had gone to Aruba. He'd gotten cards you can load with money. He said, "You give $25,000 to a bank, they give you a card that someone can use at an ATM machine. We are using these cards to pay journalists." The former Lehman broker was going to work for Eagle Tech, a Florida company that would set up to do follow me on telephones. People could have phone calls ring on multiple phones or could follow them to other numbers. And Kirshen said, "Don't do that. We're beginning an attack on Eagle Tech next week." So with Kirshen's introduction, this prospective chief financial officer of Eagle Tech logged on to the website, and he hired 3 secretaries, because the way the website worked, it would go forward, but you couldn't scroll back, and you couldn't save online. So you just couldn't save. So he hired 3 secretaries, and they sat around the clock hitting print screen every 5 minutes. He collected bankers' boxes of transcripts and stashed them in his garage. Dan Loeb, Mr. Pink, is on the screenshots because I have them. Now, Elgindy's brother was in the Muslim Brotherhood. On 9/10/2001, Elgindy called his broker at Smith Barney and told him to sell all the shares he had, because tomorrow the Dow is going to 3,000. It was at 9,600. And the next day, the planes hit the buildings. A day after, the broker at Smith Barney called the FBI. He said, "I have a client who seems to have known about this." They looked into it. The Lehman ex-broker gave the FBI the screenshots. So aside from Elgindy's Islamic connections, the FBI found out about the short selling attacks. And after that, they also found out that he had bribed 2 FBI agents who were giving him tips, such as, "We are going to raid this company next Wednesday." And he'd give them $20,000, and he'd short sell the target and put it on the message board. Elgindy was arrested in 2002. He was found guilty and sentenced to 13 years. The FBI couple also went to prison. After 7 years, Elgindy got out. A few years later, his son posted on Facebook that his father had died. Journalists seeking information from the coroner were not provided with anything. They were refused. And some believe that he was put into a witness protection program to give information on his Islamic contacts. Now, Jonathan Kirshen had been living in Costa Rica, and he came for a 2-day trip in 2008, 6 years after Elgindy was arrested. And he was arrested, and he was convicted of conspiracy to commit bank wire, securities fraud, money laundering, sentenced to 20 years in prison, and he is still there. Now, there were hundreds of crimes detailed in the Elgindy screenshots, information about journalists, information about important traders. There is no indication the Justice Department went after any of the 400 naking, shorting miscreants on this website. Or
sorry to interrupt, Lucy. So what you're telling me then is, if I understand this correctly, is that the Elgindy case is definitive proof that there has been manipulation by the media in the past, by journalists who have been brought out. Is that what you're saying? Is that,
yeah, they were paid for it. Yes, they were paid to do this, and the information comes from the guy Kirshen who is paying them.
Wow, that is unbelievable. That I don't even know how to respond to that, because you would think that the media is supposed to be unbiased and objective, but hearing this, I think, and having a case that is providing definitive proof is incredibly eye-opening. And that kind of ties into the next few questions that I have. So I just wanted to play a video very quickly. If we could just pull that up.
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it.
So we have this video here from Cramer, and I just wanted to pull up this question now. Not this one. I'm looking for media and collusion, question number 2 from, yes. So Saraf, and my apologies everyone in advance if I don't pronounce your usernames properly. So Saraf asked some pertinent questions that I think is kind of relevant to what we are speaking here, Lucy. So at the bottom, the last 2 questions, Saraf has asked, do you believe that major media outlets have been compromised, and in what way? And do you believe it is possible that large institutions compensate media outlets to write false statements that financially benefit the institutions?
I think they're compromised in that a lot of what financial reporters do is rewrite press releases from companies and from brokers or whoever wants to get a line across, and partly it's partly a little bit of laziness, but also these people are their sources, and if you want to keep having sources, which is where you get most of your stories, you cannot turn them off. So that's a problem when you have limited sources and you're not doing your own digging, and maybe your editor doesn't really want you to do any serious digging. How can do they compensate them? Well, we've heard that some they are compensated. I don't know if the very big ones do it or whether, but you know, there are various kinds of compensation. Sometimes you get a job. You know, you write what people want to hear, and suddenly you leave at a newspaper where you're paid X, and you get a job someplace else where you're paid 10X. And this is also payment for service.
So that's really interesting, because you know, one of the questions that a lot of users have brought up, and if we could bring up that question again from Saraf. So at the end, They ask, in addition, how can a regular consumer differentiate between trusted sources and compromised outlets? And I think this is a really important question because for a lot of people who aren't necessarily familiar with media or news outlets, it's difficult to determine what is an actual objective news outlet versus what is potentially a biased. And some examples that come to mind are Motley Fool, for example, or Market Watch, or possibly even CNBC. So what recommendations or suggestions can you give to the community when they're trying to find trusted sources versus compromised outlets?
Well, first, you look for evidence after they make claims, documentary evidence. And then, maybe you have to, you keep a record of they said this, and after a month or so or more, the truth turned out to be this, which was not what they said. So because people tend to forget, they listen to something on the media, or they read something, and they forget a month later that it turned out not to be true. So I think it takes some time to continue to keep these people honest by reporting when they said something a month or two ago which turned out to be false and which was not based on any evidence.
And so thank you for that clarification, Lucy. I appreciate that. And that kind of ties into the next question that I have on the same sort of theme. Now, I've read your article about GameStop on your website, the Commissar Scoop, and I suggest everyone go and read it because it was an excellent read. But I just wanted to pull up a question from another user, and this is question number 3 on this topic, media and collusion. So Banjo Beard Arcs has asked, he would like to know your opinion on mainstream media, for example, CNBC, coverage of the GameStop saga since the January run-up. So how would you compare their coverage to your coverage? And do you think that what they have done has been objective and unbiased? And sorry, before you continue, I also want to frame this in the context of the fact that we have documentary evidence that when CNBC was broadcasting the congressional hearings, they actually edited, even though this was a live stream, they edited out those questions from those politicians who seemed to be asking the right questions and the tough questions. So if someone was watching the congressional hearings on the official website on YouTube, they would have seen, for example, Dennis Kelleher, president and CEO of Better Markets, asking the question. Whereas if you were watching that same live stream on CNBC on TV, that segment was actually edited out live, and they made no mention of it. So with that in mind, how would you sort of, I guess, what's your opinion on mainstream media coverage of the GameStop saga?
Well, I agree with your distrust, and because of that, I haven't watched television for 20 or 30 years at all. I don't have a working TV, and when there are hearings, I go to the website of the committee and I click on the place to get to the hearing, and I watch the live hearing. And I certainly would not trust any place like MSNBC or CNN or any of them to tell me the truth. So one quick way to avoid being deceived is to stop watching that media.
Sorry, can you repeat that, please, what you just said?
I haven't watched television for 20 or 30 years. Because every time I see a story where I know the facts because it's something I'm working on, they are lying. So why should I waste my time? If there's a hearing, you go to the committee site, you click on the URL for the hearing, and you watch the hearing. And the hearing will go on correctly, and nobody will censor it. But I certainly wouldn't get my news from CNN or NBC or any of them.
So you would get your news directly from the source?
Yes, and also I find it's very useful to look at articles that people are posting to the internet, and I know who's writing them, so I know whether to trust the source. And very often they're not mainstream media. And I have found, for example, that the postings on GameStop are brilliant, or give me so much more information that Superstomp, sorry, to mix that, Superstomp, they give me so much more information than I get in the media, mainstream, or even in so-called alternative media. Much better. Go to the source. Well, that's one of the sources, because people are doing research where they are going to actual documentation.
Okay, but Lucy, before we get too far here, and you're saying go to the source, which is our Superstock, we have politicians who have certain opinions about Superstock and about, us apes. I'm just going to play a video, and this was from the most recent congressional hearing. Can we just pull up that video, please?
Oh, he's so ignorant. I saw that.
You see, when erroneous and accurate information posted on social media sites has the ability to broadly influence investors and move the market, sometimes drastically, this gentleman poses a serious question for you, our regulators. There is now such a huge hole in our regulatory process because of GameStop, with inexperienced investors relying on unverified information from unqualified social media.
Wow. Lucy, you have this elected official, this politician who's saying that Superstock and GME and before that Wall Street Bets is unverified information from unqualified sources. What do you make of that?
Well, I'm sorry, the man's ignorance is showing. When I saw him speaking in the hearing, I couldn't believe what he was saying. The real evidence are the statistics that come from FINRA, which is the broker self-regulator, from the SEC, from the DTCC, which is the clearinghouse. Very often these are put out by Bloomberg and other market analysts. The actual data is put out because they have a lot of people that can spend every day going into all these places and getting the data. And the things that I read on, for instance, on Superstock, are all based on the data with charts and graphs and links to FINRA, all based on the data. I don't think, we don't know the number of trades that were made by people who were reading what was written on Superstock, or the trades that were done by hedge funds or by anybody else. So we don't have that information. But in terms of moving the markets, that is the mainstream media. That is the Wall Street Journal. That is the New York Times. Can you compare the numbers of people who see those articles and have a lot of money, very often institutional money, to the people on a website? I think there's no comparison. It would be really interesting if we could ever find out where the buys and sells were coming from. We know some of it, but not all of it. But I totally disagree with this person who is obviously showing his ignorance, and I bet he never looked at the website of Superstock and saw the very granular, serious analysis that is being done there.
Lucy, I'm blown away. I bow down to your intelligence and your amazingness, and you are now officially my spirit animal, and I want to be you when I grow up and become an adult. So I'm just putting that out there. I just want to pull up another question. This is question number 4 on this topic of media and collusion, and this is a question by Retread 83. So if we could just pull that up, please. While we're waiting for that question to be pulled up, I'm just going to read it out for you, Lucy. So there we go. Yeah, Retread 83 is asking, I would like to know your thoughts on the third congressional hearing. Actually, well, let's broaden this up and say on all the congressional hearings, because I know that you have watched them. Who, in your opinion, who was the best speaker of all these congressional hearings?
I think that Keith Gill was really the best. And
sorry, can you repeat that?
Keith Gill, he was the retail investor. He'd bought GameStop through Wall Street Bets, and he said that he made the most important comment. He said that the same share could be located dozens of times, even for multiple clients, and that option market makers like Citadel were exempt from the rules, and that they had to locate the stock. And he said the ability for the same share to be shorted infinite times is a pathology. We don't have the ability to track what shares are shorted and how many times. Now, even Robinhood CEO Vlad Tenev said, yes, someone could have no shares when the music stops, and this would and how would the claims on the shares be solved? There were 3 hearings. There were supposedly very smart people. There were people in Congress asking questions. There were the leaders of the market regulators, Gary Gensler, SEC, Robert Cook of FINRA, which is the broker self-regulator, Michael Bodson of DTC, which is the clearinghouse. None of them asked about naked short selling, fails to deliver. None of them asked about any of the funny business that goes on, which I'll talk about in a minute, that relates to the Overstock case. None of them talked about that. The best person in those hearings was Keith.
Okay, sorry, I just have to take a moment here, Lucy. So you are telling me that of all 3 congressional hearings, and you have watched them all, correct?
Correct.
So of all 3 congressional hearings, the best, most educated, most qualified speaker that you have heard, in your opinion, was a retail investor named Keith Gill. Sorry, I just know him by his Reddit name, which is deep effing value, and also on Twitter he goes by Roaring Kitty. You are saying that this retail investor was the most eloquent, most intelligent, and most qualified speaker.
Now, on this question, remember the title of the hearing was about GameStop and short selling. And if you're talking about short selling, you have to be talking about naked short selling. Now, I'm not saying all the other people didn't say interesting things about their subjects, but they ignored the question. They ignored the elephant in the room, because the elephant in the room is naked short selling. But I want to get to another story, because you started to ask about the media before. And this is a story which both talks about the media and also about the flim-flam that's going on, which none of these people alluded to except Keith Gill and Vlad Tenev. This is the Overstock.
Vlad is the boy from Bulgaria.
And he's the CEO of Robinhood. So this is the Overstock story. It is very important. So the part about Elgindy paying off the media takes us into the Overstock story, where many of the crooked tactics used against GameStop were perfected. So in about 2004, Overstock was targeted by naked short selling. The CEO, Patrick Byrne, got a call from someone on a stock message board. This is not Elgindy's. This is something more like a community board. And he warned him. He said that Gradient Analytics, which is one of the companies that analyzes stocks and puts out the information, they would continue to publish outrageous information at the behest of short-selling hedge fund clients, such as Rocker Partners. Journalists, he said, journalists are going to call you, and and he listed reporters to Byrne. He said they will write hatchet jobs on Overstock, and the same information that ends up in the Wall Street Journal would get into the hands of reporters in Fortune, Forbes, Barron's, The Street, Market Watch, all of whom would call in coming weeks. And your short interest, which is the shares that have been sold short but not covered, is going to skyrocket. And Byrne said, "Oh no, I don't believe that's going to happen." And then he said, "You will come under federal investigation. These people are wired into the federal government. You will see stocks appear on small foreign exchanges like Munich, Hong Kong, Singapore, without Overstock's authorization, making it easier for hedge funds to sell phantom stock." And then he predicted Overstock would appear on the SEC's threshold list. This was a list of naked short selling victims where the fails had not been covered for a number of days and weeks. He said to me, Byrne did, every one of those predictions came true. The stories in the financial press, the investigations by the Federal Trade Commission and the SEC. He said one was opened by Richard Sauer, who left the SEC to be a securities lawyer for Rocker Partners. So Byrne was learning about other companies also on the reg show list of companies that had been shorted and fails had not been covered. They had the same group of journalists attacking them. And Byrne said there was an incredible similarity, a coincidence of time between lawsuits, federal actions, stories by the same reporters, and enormous spikes in fails to deliver. There were patterns. People seemed to know about in advance what was happening. So he took his information to the SEC, and Mark Fickus of the SEC San Francisco office started investigating some reporters for their role in the criminal targeting of Overstock. But the financial press got to the SEC Commissioner, Chris Cox, and he canceled the subpoena. Now, another player in the scheme was the law firm Milberg Weiss. It hired shills to short sell targeted companies. The companies would be attacked by the journalists, by people in some of the agencies. When they declined in value, the law firm would then sue them, would actually sue the companies, not sell the shorted, not make money from the shorted sales, but sue the companies in the name of the shill. You have not acted properly. That's why the price has gone down. In 2006, the SEC filed a lawsuit, and the DOJ, Justice Department, indicted Milberg Weiss, saying it paid plaintiffs to purchase the securities. They would be told to buy stock in such a company. Months later, it would crater. But didn't ask them, how did they know that the stock was going to crater? And the only charge was it was illegal to pay shill plaintiffs. So the eighth largest law firm in the country.
Sorry to interrupt. Did you just say shill plaintiff?
Well, means a fake plaintiff. A fake.
Okay, so shill is a real word, is what you're saying.
It's a real word, yes. It means
okay, thank you.
It's a fake plaintiff. So the question is, 2 lawyers from Milberg Weiss went to prison. But why did these agencies, the SEC and the Justice Department, not look for the other part of the scheme? There were many parts of the scheme. It didn't happen by Milberg couldn't have decided this by itself. How did he figure out which companies to short? Part of the scheme. They didn't. The agencies, regulatory agencies, didn't go after it. Now I want to connect something more to GameStop, which is Overstock filed suit against 11 prime brokers in 2007. These are all the big guys. So they're Morgan Stanley, Goldman Sachs, Bear Stearns. They were Bank of America, Bank of New York, Citigroup, Credit Suisse, Deutsche Bank, Merrill Lynch, Lehman Brothers, UBS. 11 of the real biggies who have most of the trades in the country, because the smaller brokers are their clients. Although in the charges, Goldman said about Goldman, Overstock said it pursued a strategy of buying conversions from market makers who have to buy and sell shares of the stock they make a market in. And the conversions were to create inventory for stock lending at below market rates. Now, what are conversions? 4 years later, in 2011, when the case finally got to the point of being in court, people making depositions, Mark Cajotes, who was the managing partner of the $1.5 million Copper River Partners, which had been called Rocker Partners till David Rocker left, and he'd been Mark Cajotes had been one of the partners. It was one of Goldman's largest short-selling hedge fund clients. He described how the conversion trades created faked shares. First, people out there, many know, many don't, a call is an option to buy a stock at a certain price by a certain time. A put is an option to sell a stock at a certain price by a certain time. Cajotes said a firm or a market maker would synthetically create a short by doing options trades, buying the stock, selling a call, or buying a put. And the partner would do just the opposite. By doing that, they would, by buying the stock, they could create a borrow off the option trade, and it would leave them neutral, but it would create a long stock, and they could lend that out to cover sales. But they were counterfeit shares that Goldman had created. This is the kind of thing that you have to read several times in order to understand it. And Cajotes was upset. He was being charged to borrow stock he said Goldman didn't have. He was being lent. And the thing is that fees for stock lending are a major part of Goldman's income. They can charge 30, 40, 50% for a hard-to-borrow stock. The Overstock suit said conversions were bought by prime brokers and used to acquire or invent long stocks that they could then loan out, and they would get fees and even sell as if they were real because they were real on their books. In his testimony, Cajotes said, "I think the securities lending market is just like the mob. I think it is completely rigged." And a staffer in a back office of a trader explained to me that such conversions gave Goldman the chance to lend stocks it didn't have. When Goldman did that with Overstock and never delivered, they could turn around and say, "We've cleared this trade. We can now offer it to our other customers on a stock loan borrow basis." And there would be a huge benefit. And clients would turn a blind eye and say, "Well, we got the stock, we borrowed it," even though it would never settle because it wasn't a real stock. When the documents came out and Overstock was able to get emails that were talking about this between Goldman and its clients, Goldman settled with Overstock in 2015 and paid $20 million. There was something there. If they didn't have the evidence that Goldman was being crooked, Goldman would not have paid. Now, Byrne told me he got subpoenaed to turn over to the Justice Department the evidence that he was able to get through discovery, through getting the documents from Goldman. And he said, by 2010, I know the FBI had an indictment drafted against Goldman Sachs. We had all the data. We spent $20 million on discovery to get these guys. All he gotten back was $20 million, but he said to me it was well worth it. There were agents working 3 years on this. They went to Eric Holder, who was Attorney General, head of the Justice Department, and he refused to sign their indictment. And a week later, he went to Congress and said, there are some companies too big to fail. Too big to fail. So at the very top, someone like Eric Holder was, in cahoots, supporting, protecting the miscreants, the people who were breaking the law. That was Eric Holder, who is still held in high repute by people in power. That's important. There's a closer connection to GameStop. One of the Goldman clients was Wolverine Trading. And among the documents that Overstock got was an email that Wolverine Trading sent Goldman Sachs asking whether there was some effort at cleaning up fails. Now, cleaning up means buying the shares and actually delivering them to the lender or the buyer to cover the short. Goldman said, "We will let you fail." That's on an email. That was in the court case. That violates SEC rules. That is illegal. Wolverine was not a normal market maker. It colluded with broker-dealers to promote naked short selling. In 2011, it had to pay $2.4 million after NASDAQ found it guilty of violating Reg Show, the rule about naked short selling, by failing to close and deliver positions, engaging in sham transactions to improperly reset delivery obligations in the threshold securities. Those are companies whose fails to deliver have persisted for weeks. Now, the scam, which the SEC has actually written about in papers, even if it doesn't always go after these people, was called buy right. And the trader buys a security at the same time sells a call, which is an option to buy on that security, uses the bought shares to cover the short, but now has to deliver the same shares to the buyer of the call, which was the option to buy. Only this is a new transaction. So the short sale timer is reset. So forget about trade +3, now it's trade +2 to pay. The trader may never deliver the shares because the trader can roll over the trades and do the deal over and over again with these fake options connected to buying shorts conversions. And more evidence for me that Wolverine was very likely guilty of more manipulation, because the other one, it had to pay. They found out they were really doing that. In February this year, when Robinhood made, the broker made hundreds of thousands of trades for $1 a trade in dark pools to manipulate the price. And it had never traded in dark pools. It had sent its trades through Citadel. It was trading in hundreds of thousands, up to 700,000 shares in a period of some months at $1. Now, dark pools were set up for huge trades, so trades that they wanted to have them secret so they wouldn't move the market. So if somebody was buying 2 million shares of IBM, they couldn't get it only from one other broker, so they had to get it in pieces. Well, as soon as they made the first deal to buy, everybody would see it if it was an open exchange, and that would bid up the price. You want this? You can have it, but for more money, we're charging you more money. That's what the dark pools were about, so that you could make huge trades and not move the market. $1, it's not a huge trade. And Wolverine, they were also, they traded several $100,000 worth of trades, and the average was $3.85 a trade. Wolverine was doing that. So that makes me suspicious that that company, that Wolverine, has not changed its very questionable practices. Now, why do I suspect that these tactics were used to create fake shares? Because the obvious sign of market manipulation is massive short interest, that is, fails. Nobody has covered the shorts. And it could be, if it's huge and lasting, it means the shares were never borrowed to cover and deliver. Well, at one point, GameStop short interest was 226%. 226% of existing shares had been sold short, more than twice as many shares as existed, and of course, not covered. So that's how some of the things that Overstock discovered, the share conversions, they also had buy rights. These are things I think were also used in the market manipulation of GameStop shares.
That's absolutely mind-boggling, Lucy. And everything that you have described from previous cases and previous examples as it relates to GameStop it's just so similar. I mean, you see the same patterns over and over and over again. And it's just incredible that this has been going on for so long. Now, Lucy, I see that we have reached the 1 hour mark, and I know that in our previous conversations, We spoke about just, sort of ending it at the 1 hour mark. But the feedback that I have received from the mod team and in the chat is that they would be honored if we could continue hearing from you for maybe another 20 to 25 minutes, if that's okay with you.
It's fine with me, and I can come
Excellent.
back. There's so much information.
Yes, and there are some questions that I want to get to at the end, but what I would like to do right now is I have a number of questions that I just kind of want to go through very, very quickly, sort of like a rapid fire type of scenario, and just hit as many sort of short questions as we can before we get to the final conclusion. So if we could just pull up my screen. And so the first question we have here from Mexican Red is, my new #1 question, in whose interest is it that we do not have a system like the one highlighted in the article? And the article they're referring to is one that is speaking about sort of a more equitable and fair stock market system. So in whose interest is it to not have a fair and equitable system?
It's in the interest of the big broker-dealers and the hedge funds, the big traders. They are making money off this corruption. And they are mostly given a pass by the SEC and the exchanges. Sometimes they get a slap on the wrist. They pay a few $1 million fine, but they're making billions. That's the problem. You can't stop it unless there's real punishment. I think that if somebody robs somebody of $1,000, they go to jail, or $10,000. These companies are robbing the society of multi-millions. They need to change the laws so that the people who do this go to prison. That will certainly concentrate their minds, because even when the fines are paid, they don't pay them. The fines are paid by the stockholders of the companies that are found guilty of Goldman. The head of Goldman is not paying those fines, probably getting a boost in his pay. If these many millions aren't enough, let's double it. So I think that's what has to happen. But it makes a lot of money. That's follow the money. That's why this continues.
Wow. Okay, and so my next question, or the next question from the community, and if we can just pull up my screen again, does speaking out on topics that involve high-profile corruption and/or very rich, powerful people ever make you fearful to publish certain stories?
No, I have not been threatened physically. Occasionally, but not on this kind of story, but in another story, somebody I was writing about sent a threat of a lawsuit to a publication, and the publication killed the story. But I haven't been afraid, and I think there's no point in being an investigative journalist if you're going to be afraid. You might as well get another job.
Okay, and so the next question, let me just pull it up here as well. I'm just going to scroll through these. We've already answered a lot of these. Here we go. So this question from PBWP90, whether there's any data or disclosures that you've been keeping an eye on recently. So this person runs an investment data site, and they're always curious to hear what information others find interesting. So Lucy, where do you get your information from when it comes to the GameStop situation?
I get it from Superstock, and they're very credible because they cite all the sources. Every time I see a chart or some numbers, they say, and this comes from here, and this is the URL. That's the best places. I mean, that's the best source that I can think of.
But didn't that politician say that this information is unqualified? And so you're telling me that an award-winning investigative journalist gets her DD from Superstock?
I read everything that I can, but most of the articles on this story don't provide data, and so therefore I'm suspicious. I always follow the numbers, follow the proof, and it doesn't matter who put it up, but it just turns out in this case that that's who's putting it up. And I think that one could then see who did they cite? What is the URL? And then you can go to that place, and maybe they have many other things that also would be useful. But that's where I go first.
Now, Lucy, sorry, just interrupt. So I've had to mention a few usernames and I don't know how to pronounce them. So I think it's your turn now. So can you cite some of the users that you have been referring to? You know, whose DD do you look at? Because I would love for you to try to pronounce their usernames.
Oh, okay.
I'm the only one who doesn't know how to.
I may not remember that now. If you'd asked me before, I would have written it down.
Well, I will.
Well, there's one called Brokaw, who's very good, and I've been working on an article about the whole GameStop case, and I'm quoting and using material from a bunch of them, maybe half a dozen or 10 of the people who've been writing. So that's one of them. And when the story is finished, and when it's published, I certainly will send the link to Superstonk and also put it on my in Twitter at Lucy Commissar, and so it'll be there. But you'll see the names, and I'm sorry if I can't remember them now.
That's okay.
That was one of the recent ones. And part of it is that a lot of these things are not real words. You have to sort of remember them because they're connections of syllables that are not real words. Makes it a little bit difficult.
That's fine, Lucy. I'm so glad that you did that. Yeah, my name is the same thing. So if we could just pull up my next question here. I apologize in advance for this person's name. Can we just pull up my screen with the question? Yes, so I'm not going to pronounce the name, but this person has said, what are the best tools to determine how many shares are currently in circulation, and what tactics could be used to hide those numbers?
I don't know. I mean, it seems to me that the people that FINRA knows, the DTC knows, the DTCC is Depository Trust and Clearing Corporation. They clear shares, except they don't clear what goes off clearing, which is through the dark pools. Off clearing means not through the regular clearinghouse. That's where a lot of the dirty stuff goes on. But and then the DTC, which is a subsidiary, is the vault that actually holds all the shares of all the stocks. People do not have their own shares. They have a digital entitlement to shares. So the DTC, I would think, would have all the shares, and the DTC, then another alphabet, NSCC, which is the National Securities Clearing Corporation. It's another subsidiary. They do the actual clearing. So when stocks move around, they will know it. There is a continuous net settlement system where stocks are moved to be settled, and there are all these, but there's not one. And I don't know whether the people who are running this really want there to be one, but those are the agencies that would know it. No private person would really know it unless you got all of the big prime brokers like Goldman and JP Morgan and the others to all agree to tell everybody about all the shares that they were moving, but I don't think they're going to do that.
Thank you for that, Lucy. I'm just going to pull up the next question here. So this is from Half Dane, and this person has said, first of all, he remembers reading your article in March, and they're starstruck by the fact that you are here with us. Let me just try to zoom in a little bit on my end so that we can make that a bit bigger. So this person has asked, being a European ape, I've read many claims that this kind of market manipulation wouldn't be possible over here, especially naked shorting would be effectively prevented. Do you think that is accurate? Is there a way to effectively prevent naked shorting?
I'm not as familiar with Europe. I know that South Korea has been very active in dealing with naked shorting and in attempting to prevent naked shorting. But I don't know enough about Europe. Of course, there's a way. This was proposed some years ago, when Biden stopped being a member of the Senate in order to become the vice president, the person that that was appointed was Ted Kaufman, who had been his chief of staff. Ted Kaufman was excellent on this issue. So, and this is mentioned in the article that was in American Prospect that I wrote in, that was published in March. His chief of staff was Jeff Kavanaugh. Now, they got some other senators involved, and they attempted to get the DTCC, the SEC, to agree to require what they would call a hard locate. That means a company broker could not just say, we're shorting this, but we know where we can get a share when it's time to cover this. We know where, except they say that we know where to 10 or 20 or 50 different places, and it's the same share that they're pointing at. So what Kavanaugh wanted was to give a number to each share. I don't know whether they already have numbers, but they would each share would be identified by a number. So when you say I am borrowing a share, or I have located the share, because it's mostly located, they don't really borrow, they locate. It has to have a number. So the next person, or that same person with another client, cannot locate the same share with the same number. It got knocked down. It got totally knocked down at that time. I think it's more than 10 years ago. So now that Biden is in the White House, I wonder what Ted Kaufman is doing. Kaufman is still a major advisor to Biden. I wonder whether he is trying to press him on this, on the hard locate. They tried to do it, and we will see. But that would be a way to stop naked shorting, and it's easy. But the people in power don't really want to do it.
Lucy, I'm thrilled that you mentioned South Korea, because it's interesting. There are a group of investors, retail investors in South Korea, and they refer to themselves as ants, and that goes back to their history. And there was an event that happened in the 1980s, and so they refer to themselves as ants in a very positive way, as if the group is strong together. And so on our Super Stonk, whenever they join us, there's always a sentiment of apes and ants uniting. So it's really interesting that you mentioned that there are these very strong laws against naked short selling in South Korea. So I'm thinking maybe it would be beneficial for all of us to learn from some of those recent regulatory changes. Now, having said that, I know we're getting towards the end of it. So I just want to end off with a few final questions. So if we could just pull up the screen again. So this person has asked, have you ever been threatened by those you investigated? And if yes, what was the situation? What were the types of threats, and what came of it?
No, I haven't been threatened.
No.
The real, what the threat is, that major media do not want to tell this story, because if you're an investigative journalist, that's the real threat to you being an investigative journalist, when people don't want to run the story. I was very glad that the American Prospect, which is run by a very smart guy named David Dian, they ran the story. And I'm also, by the way, one of the reasons I know a lot about this is I've been investigating naked short selling for years, because I'm working on a book about it. And it will start decades ago, at least as far back as Sedona, which was in 2000, and it will end with GameStop and go all the way through, telling the stories that I've told you now, talking about what the regulators haven't done, what the Congress hasn't done, and there is really so much more that we can talk about, even in an hour plus. But I hope that when that comes out, because it has never been written about. This will be the first book that attempts to tell the whole story, starting from back then. And so I hope that it will get published, and that it will begin to educate the public, because I think the public has to move the members of Congress to make changes on the issue of naked short selling. It's, as we could see from the hearings, it doesn't come from Congress, and it doesn't come from people running the major regulators. It comes from people that are, you know, not really the little guys, but it comes from some very smart people who know what's going on and who can get attention because they bring out the truth.
So I have to unmute myself. I'm really glad that you mentioned your book, Lucy, because I think that is exciting news, and that really answers a question from this user, Retread83, who wanted to know if you're going to do a deep dive into the underbelly of Wall Street. So I think all of us are going to be very excited for this book, and we would love to see it published. And so having said that, Lucy, let me just see if I can pull up this question here. I just have to find my mouse so I can move to the last question. In terms of, you know, getting this book published or just being able to support investigative journalists such as yourself, you know, independent investigative journalists such as yourself, what can we do as social media users, as regular people around the world, as apes on Superstock? What can we do to either support you financially so that you can continue investigating things, or so that you can actually publish this book? Because I'm sure many of us would love to read this book.
Well, I haven't put my articles on any kind of a paywall because I want people to read them, and to me that's the most important thing. But there are people who have donated. My website has something that you click, and I think it goes through PayPal, or people could send me an email if they want to make a deposit to my bank account or send a check, and my email is listed on the contact on my website, and it's also listed on Twitter, on my ID on Twitter. So, and people have, and I think some of it comes from Superstock, because I've got some donations just in the last few days. So it would have been that. That's what people can do. To do this book, I did initially get a grant from the George Polk Foundation, which is a very prestigious, fine foundation, but that allowed me to do some research over a year or more, but that ran out. And so now what would help? What would help is a contract from a publisher. That's really what would help. And in the past, it was one of these issues that you can't convince them because the media is all saying, oh no, this can't possibly be true. Now with the interest in GameStop, and now with more data coming out and people paying more attention, I think maybe that attitude will change. Well, we will see if it does change.
I mean, Lucy, it has been truly an honor and a privilege to have you here. I could listen to you talk for hours. I just wanted to apologize to you and to everyone watching if at some points I interrupted. There's just so much information that we wanted to get from you, and there's so many more questions. I would love to, maybe at some point, if we could have you back on. It would be an honor to have you again. And I'm sure that when GME moons, one of these apes is going to start a publishing company, and I'm sure that they're going to publish your book. So if it doesn't happen before, I'm sure it's going to happen after. But Lucy, you know, in the final few minutes that we have left, what's your message to the community? And what's your message to everyone from the world who's watching this? And what's your message to the naked short sellers?
Well, to the community, keep doing what you're doing, because what's on the social media, and particularly Superstock is the one that I see, is so solid that I think it can help but persuade many people of the truth of what I am saying about the corruption of the markets, and how in this case GameStop was was a victim of the market manipulation. So I think keep doing that work, keep following the numbers as people who are writing the articles are doing. And this is true in other countries. People can begin to look into what is going on in their country. And UK is a very good place to start, as well as Canada, which has a history of market corruption, especially around Toronto, a real long history of market corruption. In the UK, Lehman Brothers, that collapsed in 2008, one of the reasons it collapsed was that it was moving shares to its subsidiary in London. There's something called rehypothecation. It's a long word. It means that you can take shares that are in the account on, I think, the ones on margin. I'm not sure if they can do this if it's totally paid, but who knows? You can move it you can lend them out. We know that. Well, in rehypothecation, the same shares can be lent out more than once. This sounds a little crazy, right? You can lend them out, and then whoever got them can lend them out to somebody else. But maybe they are using the loan to cover something, but they're lending them out to something else. Well, the U.S. has a rule that you can only rehypothecate to 140% of the real number of shares. You can go 40% above the real. Well, the UK has no limit, none at all. So what happened was, I talked to a lawyer who represented some clients who said, in the US, said they couldn't find their shares. They had been rehypothecated to London and then rehypothecated again and rehypothecated. They couldn't find their shares. And this is part of what Cajotes talked about, the rigged lending market. But that is one issue that people, and the other thing, this lawyer, American lawyer, New York lawyer, told me there was a meeting that I went to in London where people in the business, the lawyers and others, brokers, had a meeting about this problem with Lehman Brothers, and that a lot of it came from rehypothecation. And maybe we need to also have a limit, the way the Americans do, 140% maybe. They said, oh, no, because she said they're making too much money off it. They don't want to go by any rules of law. No. We'll just relend and relend and relend. It's all smoke and mirrors. So if there are people in England, this would be a very good thing to study. How is rehypothecation working? And by the way, a couple of years ago, there was an IMF paper on rehypothecation. It's a serious problem that people know about, except you won't read about it in the media because it's another example of corruption of the market.
Lucy,
my book will talk about rehypothecation and explain.
I can't wait to read that book, Lucy. So I know we have to wrap this up, but I've been getting hundreds of messages. So one final quick question. People want to know, or apes on Superstock would like to know your thoughts on Gary Gensler.
Well, that's a good question. I thought he had a good reputation at the FTC, the Federal Trade Commission. One person I talked to said, well, that's a little bit exaggerated. Let me tell you, there are some issues there. On the hearing, a lot of the questions were answered by, I've only been in the job 3 weeks. I will ask my staff to look into it. Let's see what happens. I think he's better than the last 5 or 10 that we can remember. He's better than them. But let's see what he'll do on naked short selling. He has a chance. What about the hard locate? What about the hard locate that Ted Kaufman wanted? That was about 2009, I think, when he was doing that. So let's see what he does. There's just so much time you can spend on studying because the FCC has actually written papers on some of this about conversions. They put out an alert and a warning about conversions. Well, you know what a better alert would have been? Put some of these people in jail. That would have been a real alert. What's the point of writing an alert? So they have numerous alerts about these tactics, these corrupt tactics. But the issue is, what do you do about them? And a wrist slap of $1 million or 2 or 10 on a company that's making $1 billion, that's the cost of doing business. That's what we have to watch with Gary Gensler.
Lucy, so I've just received breaking news update. This is my moment to be a reporter. Breaking news. Your Twitter account has just gained 2,000 Twitter followers since this AMA. And we're hoping that it will increase from that point.
When if people pose questions to me on Twitter, I will answer them.
Whoa, that is huge. That is definitely breaking news as well. So thank you so much for that, Lucy. I think that's gonna, people will test you on that. So we have 250,000 followers. Lucy, it's been an honor. It's been a pleasure. I am humbled. I am in awe. I'm so honored and grateful to have you here. Lucy, I just want to let you know that, I wanted to ask you if you would be willing to come back at some point.
Yes, of course.
Amazing. And without getting into too many details, I also want to know if you'd be interested in getting involved. The mods haven't told me what it is, but they have some big things in mind for Superstonk and the community, and they would be honored if you would be a part of it.
Well, have to know what it is first.
That's the perfect answer. So you will come back for another AMA.
Oh,
is
yes.
that correct? Amazing. Well, Lucy, thank you so much. It's been an honor, a pleasure. Any last words or parting words for the community?
No, I'm very glad to be in touch with the people on Superstonk. I think that you all are doing a really good job in the absence of real mainstream journalism on this issue.
Thank you, Lucy. Thank you so much. And to everyone who has been watching, thank you for tuning in. Thank you for listening to us. And we will have Lucy back at some point, and it is truly our honor. So once again, on behalf of the Superstonk community and the ape community and the Korean ant community who have been listening in as well, thank you for joining us today. Have a